Welcome to New Home Insights, the podcast from John Burns Research Consulting. I'm your host, Dean Worley. If you want to follow market trends, demographics, capital, new ideas, and endeavors that touch on housing, we're going to try to make sense of that every couple of weeks. Let's go. Welcome to the New Home Insights podcast. I'm your host, Dean Worley. Today, we're going to talk about money. Lots of it, kind of. That is because today we're joined by Rich Moriarty. He's the co-founder and managing partner at Vestra Advisors. Rich has not only made a pretty immediate name for himself as a major player in the mergers and acquisitions world, but he also has a deep long-term background in finance from, I think, almost 3 decades with Citigroup. So we're going to touch on both of those things, kind of take a deep dive, including kind of some nuts and bolts of the mergers and acquisitions process in the housing space, and then kind of touch on finance and asset strategies and capital allocation for builders, both public and private. Rich, how are you doing this morning?
Great, Dean. Thanks for having me. I look forward to our conversation today.
Me too. We've had mergers and acquisitions a little bit. We've touched on that on the show in the past. That's why I wanted to kind of use you as my kind of someone who can really walk us through the really literally the nuts and bolts of that process. So we'll start with that. But first, let's get to know a little bit about you. Give us a little bit about you and how you came to be where you are now.
Yeah, great. Thanks. So I've been in investment banking for 35 years. I started my career at a firm called Kidder Peabody. And after being there for about 5 years, the firm was sold to Payne Weber. And I went over to the predecessor to Citibank, Smith Barney at the time. And I spent 28 years at Smith Barney before deciding to retire last year and figure out what I wanted to do next in life. I would say I first became introduced to the builders back in the early 90s. So I've been covering the sector for close to well over 30 years at this point in time. And I consider myself very, very fortunate and lucky to have been introduced to the sector at the early days and with some of the original great founders in the industry, whether that be Bob Toll or Leonard Miller and Stuart Miller, Larry Meisel, Don Horton. Don Loback was a very important influence to me in the early days. So Bill Pulte. So really got introduced, when it was still a very small industry and all these were very small cap companies. And I've had the great privilege of, spending the past 3 decades, helping and watching these companies grow and become much bigger over time. That
was some pretty impressive name dropping, by the way, Rich. You know everybody. Those are all legends in the business. Did I say that incorrectly? Weren't you more or less effectively with Citigroup for?
Yeah, I was with, as I said, the predecessor to Citi. Smith Barney originally hired me, and then Smith Barney ultimately morphed into Citibank, and I spent 28 years at Citibank, and then decided to retire and figure out what I wanted to do next in life last year. Figured I still had a little bit of tread on the tire, and wanted to see what else I could do with the remaining years I have.
Let's talk about it in 1 second. First, I have a question for you. Did you get tickets to the Mets? Didn't it? Because of the naming thing? Did you ever get?
They did have the naming thing. Not a huge baseball fan, but I could have gotten them if I wanted to. But
okay, yeah. I was going to say, because if you did get them, did you sell them or give them away? Because it's the Mets. I just had to take a shot at the Mets because I'm that way. So about a year ago, you decided to move into a different direction, and you started Vestra Advisors. Tell us about that.
Yeah, sure. With kind of was going through a point in time. All my kids are grown and out of the house, and again, wanted to figure out what I would do next in my life, and decided to retire from Citi so I could make more time to figure out what I wanted to do, and spent a couple months thinking about different options. And after that, and having a lot of conversations with different folks, I decided that there was a real opportunity to start a boutique focused on the home building and building product sector. So started up Vestra in June of last year. In addition to covering the home builders, which we're going to talk about today, we also cover building products, the heavy side sector, which is cement and aggregates, and then also residential services and other areas as well.
Great intro. If you want to talk about building products, by the way, during the process here, feel free to. We can focus on builders, but we also service the building products world as well. So feel free, please. So let's start with, as I kind of tease, this nuts and bolts, almost like a mergers and acquisitions 101. So because, as I mentioned, we had a pretty diverse audience, a lot of folks. Apologies to our listeners right now who know all they need to know about mergers and acquisitions, but not all of our listeners do. So let's start with that. Just tell us, kind of walk us through that process. I don't know, the introductions, the timeline, those benchmarks. along
Yeah,
those
so
lines?
let me start by saying every deal is different,
Yeah.
both in terms of the type of company that it is, but also the process involved. I put, there's basically two major buckets that I divide deals into. One is public or private companies on the sell side, and the second is whether it's an auction process or a bilateral process. And by bilateral, I mean where it's a one-on-one discussion because folks know each other for whatever reason and are trying to get a deal done. So you really have to understand that situation from the outset in terms of how you go about this. Probably the easiest and most straightforward process to discuss is around private company. What I would say is full processes at the end of the day. So basically, in this situation, you get to meet a company. Usually, you pitch for the business, you get hired. And what I really like to do is spend a lot of time up front, really getting to understand the company, knowing what they're all about, in particular, what's different about them. What is it going to be that resonates with a potential buyer? So it's really an information, session, understanding the owners and what their motivating factors are. At the end of the day, obviously, value is important, but there's also, a lot of other things that people are focused on. So, really beginning to understand the overall situation. And then, what I want to do is a assessment of the company. Are they ready to go to market? So within that process, obviously, it's very helpful to have audits that are underway. Typically, you want to have a very good set of projections that are built from the ground up so that you can tie to what the company's actual lot positions are going forward. Typically, you want to go through in a private company to make sure you've adjusted for any of the owner compensation or extraneous elements that may be in the company to kind of give a pure sense of what that looks like. And then working with them with all that insight to begin to prepare marketing materials to go to market. That process can take anywhere from 2 months to 4 to 6 months, depending on how ready the company is. And I've worked on both types at the end of the day. So that I would describe as being the first phase of going to market. The second phase is what I call the outreach. So this is where we've agreed with the owners on who we want to approach. Typically, I like to go at the very highest level of an organization to make sure that you're getting CEO buy-in to the property that you're talking about. So you go through that outreach process. As part of that, you have them sign a non-disclosure agreement, so that they're going to keep the information that we share with them confidential. You send them the information memorandum that we've sent. I typically like to check in and have one-on-one conversations to make sure that they understand the situation and provide a little bit more background. And then at the end of that second phase, we're going to receive initial indications of interest. So this is to determine who's interested, how they're thinking about it from a value and structure standpoint, so that we can really assess where we want to take it from there. At that point in time, I say we're entering into the third phase of the process. That's where we're whittling down the companies that we want to basically spend time with to try to get to the finish line. So from there, we'll typically invite 3 to maybe 7 parties into a full meeting with management. Spending a day at the location, maybe visiting some properties if it's a single market builder, just looking at their product, getting a better sense for what it is, and spending a full day with management, going through a management presentation. Also, during that third phase, we'll be working on the merger agreement or stock purchase agreement with the company so that we could send that to the potential buyer, all with an effort to getting to the final stages of where they're submitting a final indication of interest for the company. At that point in time, we typically select 1 or 2 parties to really try to get to a final deal. And that's where the heavy duty negotiation around price, structure, and the terms of a merger agreement really kick in at the end of the day. So that's kind of the nuts and bolts for a regular way private company sell side process. I'd say a
How
public,
long does that process typically take, roughly norm?
yeah, I'd say 4 to 6 months,
Okay.
depending on how ready the company is up front at the end of the day.
Can I ask a couple questions about
Yes, please. Yeah.
some of that? One of the things, okay, so just full disclosure, John Burns Research and Consulting, we do a lot of work in the portfolio world. We do a ton of it. I think we do probably most of it. How giving are most targets in terms of their internal data? Because I won't name names, obviously, but there's varying degrees of cooperation, let's say. Is
Yeah,
that
I would
norm? Is
say
it?
if you're not ready to really go full boat on this in terms of fully disclosing everything about your company,
Mhm.
you're not ready, at the end of the day.
Okay.
Now, you can parse that information out at different stages. So the first is you're reaching out with really just what we call a teaser. So that's typically a
Okay.
2 to 3 page, mostly information you can get from public sources. But once you send that confidential information memorandum out with the non-disclosure agreement, you're sending out a fair amount of information. And when you're in that third phase of full due diligence, they have access to everything at that point.
So that's when like your sales backlogs and things like that wouldn't come until fairly late in the game. They'd
No,
send that to
sales
the
backlog would be in pretty early on. I mean, that would be part
okay.
of that initial confidential information memorandum. You'll have a full set of historical financials and projections in that phase.
On the side again of the company that might be bought, do you ever experience internal battles? Like there's a lot of disagreement within the leadership. I can imagine, children versus the parent might come up not infrequently. Does that happen?
Uh, it happens, but I try to spend a lot of time up front to understand the situation before going to market. Because to your point, once you've made that decision, you're disclosing a lot of information, you're committing a lot of time and resources to making that happen. And if you're not really ready and have the house in order up front, I kind of encourage people don't do it at the end of the day
Okay.
because it's a huge, huge commitment.
Yeah. Okay. I interrupted you. Go ahead with what you're going to get to next.
Yeah, no. So I would say that that's the regular way process for a private company. On the other hand, you have a fair amount of public company M&A, and
Yeah.
that tends to be very different because you have a public company. The fiduciary duties of the board of directors is to get the best and highest value in that, and they need to take the steps necessary to make sure that that happens. So, on occasion, public companies decide that they want to put themselves up for sale, and they go through a very similar process to what I just described, where it's a full
Mhm.
vote process. But I would say, they tend to be more ready up front. So they already have a pretty well developed, kind of internal reporting. They have audits, they have projections, a lot of things that we could leverage to get to market a lot quicker. I'd say more often than not in public companies, they tend to be more this bilateral or one-on-one, or at least it starts that way, where somebody's approached somebody because it's a good strategic fit. They think, it makes a lot of sense. And from there, you begin to have conversations to see if there's a deal that can be, had at the end of the day. And then, we'll kind of, assess value to see if we think that that's the best and highest value, or if we need to check with other people at the end of the day to make sure we're getting the best value.
And I know you're looking at things analytically. I mean, are you really, really checking the pulse of the markets that these folks are in? Are you supermarket oriented and kind of
Yeah,
trust but verify?
that's a good question. I would say we're not, kind of in market to the same extent that John Burns is. You know what I mean? Knowing what's happening on the ground. Typically, we rely on somebody like John Burns to do a market study, to kind of confirm what the assumptions are. I think where we try to, really um, get our arms around the situation is one, very analytical in terms of how to go about valuing a company.
Okay.
So, before we go to market, make sure that the seller has a reasonable set of expectations on what they can expect when they go to market. And we do a lot of rigor around that analytics at the end of the day.
Okay.
So that's a lot of the upfront, kind of work that we do as part of that.
Are those kind of the key factors? I guess, what are those critical factors that really make an M&A work?
Yeah, so I would say, in addition to the analytical part, I think one of the things, having spent as much time as I have in the industry, is really trying to have a good pulse on what companies are looking to do deals, what they're looking for in a deal, and therefore, in effect, playing matchmaker sometimes
Mhm.
to kind of figure out where the buyer and seller would be in terms of what the fit are. Um, I'd say in today's environment, what people are really looking for from an acquirer standpoint is an opportunity to expand geographically.
Okay.
So, there's been a number of deals lately where, kind of people are buying in market locations to, where they haven't been, and they want to therefore get into
Yeah.
those marketplaces. A lot of times they're looking for a very healthy lot supply. So they're going to look at the lots on the ground, see what the value of those lots are and what they can expect to deliver in the future. I'd say, in the past, there's been a lot of activity to really just gain critical mass on a strategic
Mhm.
level. And there's a lot of benefits, which I think we're going to talk about later, around scale and what
Okay.
that means in terms of your overall return. So deals that are complementary but can improve scale in the US are really important. And then finally, people are trying to get a sense as they work their way through the process of what are the synergies.
Uh-huh.
And, that's always a dangerous word, overused word, I would say, in the M&A
Yeah.
parlance. But it is real here. So, on the one hand, You have certain things that the big builders are doing, like around purchasing synergies, where they negotiated national contracts that they can now deploy into a smaller company that they didn't have before. There's a lot of SG&A leverage. The public builders typically have much better access to cheaper forms of capital than the private builders have. So they're going to be able to fund the business on a much cheaper basis. And then finally, almost all of the public builders have mortgage operations and title operations that they can bring to bear to capture another income stream that the private builder may not be covering. So, there's a lot of things that go into it. At the end of the day, I kind of glossed over product, and price point, but that's really important as well. So some
Okay.
builders are very focused on a certain type of price point or product, and whether it fits or not will that'll be a governing item as well.
We can put that up here in the next module here when we talk about kind of the not the nuts and bolts anymore, but kind of the dynamics of M&A. First, though, I think you did mention synergies is an overused word, but it's not as bad as disruption or paradigm. So
That's true.
you're not there yet. You're not that bad. So let's segue to kind of that idea of the state of the mergers and acquisitions market from a perspective of what we're doing. It seems like that market is on fire right now. Is that accurate?
Yeah, I think people like to more than not in our business like to hype up the market. I wouldn't describe it as being on fire. I would describe it as being very healthy at
Okay.
this point in time, and I would say that you have the ingredients in place to have a healthy marketplace, and that starts with the buyer appetite at the end of the day. And I think there's a bunch of things that are working in the favor of the market right now, which is a generally healthy market backdrop, from an expectation around housing, a view that there is a shortage of housing. So this cycle has some legs to it going forward. And therefore you could do a deal and have time to integrate it and, harvest the benefits of that particular deal. I'd say it's also tends to be very sentiment driven. So, when builder stock prices are doing well, they feel better about doing M&A than when they're
Oh,
viewed as being out of favor or not trading at, healthy levels. So stock prices have a big impact. And then, many of the public builders have also deleveraged quite a bit over the past, several years, so that they have, lots of capital, to deploy into M&A and other initiatives at the end of the day. So I'd say all of those, ingredients, spell for a pretty healthy atmosphere. On the sell side, I would say, it's a very good environment as well, where multiples and valuations in the M&A market are good to very good at this point in time. And there's a number of builders that either for estate planning purposes or getting to a certain
mm,
age where they working really hard and time to hang it up a little bit and do other
yeah.
things with the business that they've created are doing that. So there is that sort of aspect to it. And I just say that the valuations are pretty good, so people can get stuff done in today's environment.
Yeah. So in other words, they can make a lot of money right now from what they've built
Yes.
over a
Yep.
lifetime.
And
Okay.
I'd also say they find, business just getting tougher and tougher. There's been a huge market
Yeah.
share gain on the part of the public builders. We talked about some of the things that they're doing to, kind of compete more effectively against the smaller players. And, I think as time has gone on, the private builders, are seeing that, it's just tougher and tougher to compete. And,
Yeah.
therefore it might be a good time. I'd also say, there's an interesting nuance, and we're going to talk about land and all that a little bit later. But a lot of these private builders are also very good at land development. They know their markets extremely well. They know the land sellers, and it's a very different skill set between being a home builder and being a land developer. And there's also a number of builders that are now opting to say, "Hey, let me sell my home building company, and I'd rather
Mhm.
spend my time on sourcing land, developing lots, and then
Okay.
selling it to the home builder going forward." So there's an opportunity to bifurcate a lot of these businesses into home building and land development, and let the people maintain their relationships on the land development side going forward.
Is it the norm for the acquiring leadership to stay in place as the leadership of that new division or whatever you want to call it?
I'd say it's a mixed bag on that front.
Okay.
It's all over the lot. It depends on what the seller wants to do. At
Yeah.
the end of the day, I'd say most of the successful home builders that I've worked with have built up a very, very successful management team that's doing a
Yeah.
great job day to day. So that seller will typically stay on through a transition period or an integration period, but not be expected to stay on for a long period of time.
At the risk of kind of re-asking the question I asked you a minute ago, is do you see those generational battles in the opposite sense? That is, you like you said, you have this founder who's worked all their life and they're ready to retire, but they might have some children. So there might be a question: do I sell out, quote unquote, or do I leave this for my kids to continue to build? That could be tough, I imagine.
Yeah, I would say my experience is almost the opposite, which is, the founder, this is a business that people are very passionate about. It's in their blood. It's very difficult for them to, kind of leave that behind, especially what they've created. So I've often found that it's the founder that's usually hanging on a lot longer
Okay.
than their family wants them to hang on, and
Yeah.
they would prefer to, find a clear path to liquidity for the benefit of the overall family at the end of the day.
That was kind of my first question. I no one will know from my brief description, but I know right now I have a client, a builder, that's exactly the dynamic that's happening. It's like, we want to cash out. But the founder's like, I'm not ready. So we'll see what happens there. Yeah, I guess so. Oh yeah, it makes sense that it would go both ways. What are you mentioned, supply and those kinds of factors going on, but what are the reasons so many public builders right now are looking to grow through mergers and acquisitions? Is it partly because it's really hard to do that organically, or is it just because the time is ripe?
I think if you look at I'd say the deal activity, this year is probably a pretty good indicator of what's going on under the surface. So, on the one hand, you have the well publicized discussion around the Japanese builders, buying into the U.S. The
Yeah.
biggest example of that being Sekisui buying MDC earlier this year, and being a very, very big move and putting them into being the top 5 builders. And I'd say whether it's Sekisui or Daiwa or Sumitomo Forestry, I think they all have a common motivating factor, which is, growth in Japan is relatively difficult to come by. Coming to the U.S., offers a lot more growth opportunities, and they feel like they can really build those over time. But I'd say even more important than that is a view that in Japan, each of them are very good builders, and they believe that they've brought technology to bear and systems to bear that they can ultimately bring to the U.S. over time. That's not going to happen next year. It's not going to happen the
Yeah.
year after. But I think over a long period of time, the Japanese feel that they can, really use the expertise that they've gleaned from a production standpoint in Japan and an environmental standpoint, and bring that here and be very successful. So those are the two motivating factors for the Japanese.
Can
I'd say,
I ask Rich, a real question on the Japanese part? Does that mean they're going to be pushing eventually for offsite manufacturing?
well, that's what they do in Japan. Yeah. And they
Exactly.
have,
Yeah.
very, successful offsite, plants over there, very precision
Hmm.
manufacturing. And I think ultimately that's their goal here, but I'd say
Okay.
we're a long way from here to there.
Yeah.
So, don't
Yeah.
expect to
Okay.
see that in the next, couple of years, but that
It's
is one.
interesting though that there might be that kind of a push factor because it's one of those situations where once the critical mass is there for offsite, I think it'll take over. But that transition is brutally difficult.
Yeah, that's a whole separate topic, much
Yes.
discussed,
Okay.
and lots
I
of
just
examples.
when you said about their technology,
Yeah.
my first thought was offsite. I just want to make sure that I understood that. Okay, I'm sorry. Go ahead.
Yeah, no, so that's sort of one very active sector of the marketplace. I'd say the second is companies of middle scale that are public that kind of understand that to really that scale is going to benefit them, and they're on a very aggressive effort to do so. I'd put Landsea in that category, where they bought a company called Antares in Dallas, which was an entry point for them in the Dallas market. They bought another company called Richfield in Denver that gave them a presence into Denver. You have another company called United Home Group, which recently went public through a SPAC, kind of a couple of years ago. And, they've been very active in the market, expanding into their core corridor. They bought companies called Rosewood at Creekside. And then even larger companies like Taylor Morrison, bought a company called Pyatt in Indianapolis to expand their presence into that. So it's kind of this infill, filling out the map overall, kind of going forward. Another example would be Smith Douglas buying Devon Street in Houston to kind of complement what their existing marketplace is. So I'd say, most of the activity in the U.S. domestic side is companies trying to fill out the geographic map or gaining a very important land supply, lot supply in the markets that they move into.
Okay. Do you see the pace of M&A growing near term, staying this healthy rate?
I think, it's a relative to other sectors, consolidation in the home building sector is a theme that's here to stay. I mean, there's still a long way to go from a market share growth opportunity, and you're going to continue to see deals happen. I'd say they tend to ebb and flow depending on some of the ingredients that I talked about before in terms of how bullish people are about the current market environment that they're in, and the availability of different properties over time. So I think it's here to stay. I think it's at a healthy clip. I don't see it getting a lot better, but I don't see it getting a lot worse anytime soon either.
You mentioned earlier in terms of target builders, one of the things that the acquirers are looking for is supply. So I just wanted to briefly circle back to that. I mean, my guess is that's absolutely critical in today's supply constrained world. Is that one of the biggest reasons is we want your lots and
Yeah.
Your pipeline.
So having a presence in a marketplace is really critical. How you control those lots, whether you own them or option them,
Okay.
or one of the other trends you're seeing is some builders basically acquire a company, but at the same time move a lot of those lots into a land banker so that they can take those down in the future. But having access to a very good lot position is critical. Yeah.
Okay, we'll touch on land banking here in a minute. Quickly though, in terms of the time horizon for M&A, let me ask you this: if folks looking at the market, are they thinking pretty near term? Or are they thinking really long term? That is, if the market is kind of slow right now, do you see M&A start to slow, or are there going to be those actors who think, no, we need to think 5, 10 plus years in advance?
Yeah, I'd say the Japanese are thinking, decades in advance.
Okay.
So they tend to take a very, very long-term approach to this. I'd say, most of the builders in the U.S. are kind of focused on, a 3 to 5 year horizon. They're, that's kind of the planning period that they're operating in, and where do they want to get to, over different points of time is kind of how they're thinking about it. Very rarely do you see deals that are short-term oriented.
Okay.
I mean, I wouldn't say it doesn't happen, but that's not really the norm at the end of the day.
I figured that, but then again, the Japanese population has a much longer life expectancy than we do, so maybe that's why they're
That's true.
just throwing that out there. Do acquirers kind of have to be though somewhat bullish on the housing market to think
Yeah,
about making these
no
acquisitions?
doubt about it. I mean, when builders are trading at less than book value, it's very tough in that scenario to go out and be bullish on M&A and pay a pretty fulsome price. I'd say the other thing, now that you brought that up, is there's a very high bar from an investor standpoint on what kind of deals public builders do. So, not only do they need to justify it to their board, but they need to justify it to their investor base after they announce a deal. And how that reaction is really critical, to how a company is perceived in the public arena. So I kind of just bring that up because people are very sensitive to that. And one of the areas when stock prices are low, are people going to say, well, why did you buy a company instead of buying back your stock? So if I spent $200 million on a company, you have to justify, why did I not use that $200 million to buy back stock? Or don't you have enough growth opportunities within your existing footprint to put that capital to work? And that's sort of some of the thinking that goes behind how and when people decide to do deals.
Are there any trends you're looking at that would tell you, hey, M&A is going to slow or M&A is going to increase? Any metrics you look at and track?
I tend to look at the overall state of the market outlook. So are people pretty bullish about where the future holds? I think we're in a good equilibrium right now where people think that the market's in very good shape. I think the state of the financing markets is really important. So what's the cost of borrowing? What's the access to capital? And that's going to really factor into how people go about financing deals. So I think that's a very important component. And as I said, stock prices tend to be a decent indicator as well about how kind of bullish people are about the sector overall.
So you kind of alluded to it just a second ago, but there is kind of a trade-off for being public. You do get this incredible access to capital, but you also have people looking over your shoulder all the time. And some of those people are going to have certain expectations or make judgments about your strategy. So, I mean, does that make them kind of very cautious, I imagine, of what's on or off their books? And we'll talk about land banking in just a second. But first, why is it that these public builders are looking to be very kind of asset efficient and their capital allocation is so critical.
Yeah. So, one of the things that, I think is important to level set the whole thing is there are benefits to scale. I think when you do an analysis of the larger public builders versus the smaller builders, you're going to find that the larger builders, typically have at least 100 basis point better gross margins. And that's because they probably have purchasing leverage that, smaller guys don't have at the end of the day. They may have relationships with subcontractor trades that allow them to provide more just in time closings. So therefore they can negotiate better terms with their subcontractor trade. At the SG&A, selling general and administrative cost level, they typically have at least a couple hundred basis points advantage, and they probably have at least 100 basis points advantage from a financing side. So I think there is a general view that scale does have its benefits, but how you get from point A to point B is fraught with risk, and that's when people are really discerning over the M&A that they pursue, to really mitigate that risk, to make sure that they can achieve what they want from an M&A deal. And a lot goes into that. It's the people, that you're acquiring. How much can you really trust that? What's the nature of the organization? And that's kind of what the softer part of the whole M&A business is.
Okay. Does being public make it easier, or maybe in some ways harder, to move organically into markets? That is on the plus side. Public money does want to see builders grow, right? So, but on the cautionary side, it seems like they can be penalized if they make a quote unquote wrong decision, or the public money is, judges it that way.
Yeah, that's the age old term, dumb tax. That a lot of people feel when they move into a new market. There's a dumb tax associated with that. That could be 2 to 3 years before you're able to really figure out the market, get the right people, and get to scale to generate returns. And therefore, if you can buy a single market builder that gives you that overnight, there is a benefit to that. And that's where you see a lot of M&A activity take place. But there's other builders that have done a really good job about organically growing into new markets, and have a proven playbook, and have a bench to allocate people to it. So it's a combination of both.
Have you seen the public money, though, react negatively to what they perceived as a wrong-footed move into a new market?
I think it's very difficult in the public company reporting to get granular detail on what's happening in any one particular market. So I'd say the judge of that is really how the company's doing overall, from a growth and a return standpoint. And that's how they measure, public builders, which is, what kind of returns are they generating, and, therefore placing a multiple on that. And how you get there differs by builder.
Yeah. What other public options then, or other, I guess, financial options are there for builders to access money? Like, I don't know, IPOs if you're a large private, or anything like that? What's
Yeah. So I would say, on the IPO side, there's a long track record of builders. I worked on most of the IPOs that occurred coming out of the last cycle in 2013. I always start off any conversation with a private builder, which is, if you don't want your neighbor to know how much you're worth and what your salary is, don't go public, because you're telling them everything. And for a lot of people, that's a non-starter after that conversation. Yeah. So that's where you have to start. But there are benefits to being public. It does, give you access to, cheaper capital. It gives you a currency to be used, either for acquisitions, raising capital, or for estate planning, where ultimately you can achieve liquidity over time, for the benefit of yourself and your family.
Okay.
So, there are benefits. Outside of IPOs, there's the public debt option, so public senior notes. And many, private builders have accessed the public senior note market over time, and that gives you longer dated capital without maintenance covenants, and as an alternative to the bank market. So that can be very attractive. And then I'd say, if you don't qualify for a public deal, which, typically requires a $250 million size bond deal, there's the mezzanine debt market that, is usually with private credit groups. And, that's out there, tends to be, a little bit more expensive than the other forms of capital, but is also another means. And then you have the whole, kind of evolution of land banking as a potential alternative.
Let's talk a little bit about that now then, and especially let's talk about kind of from the private builder perspective. Right now, there's just tremendous pressures on private builders on capital. I think besides M&A, what can the private builders do to help their balance sheet? I mean, can private builders, is it realistic for private builders to do land banking?
Yeah, no, I think a number of private builders do have relationships with land banking. A lot of them access private friends and family type of money that are providing it either in
Hmm.
the form of mezzanine, land banking, or preferred stock type of returns. So there's a lot of different ways that private builders finance themselves. Obviously, the lifeblood of that is the traditional local and regional banks, which provide lines of credit through advanced ratios on the home construction that you're pursuing. And I think that's been the lifeblood of many private builders over time.
Let's talk about that. Are the regional banks, the community banks, are they just not out of the game anymore? But have they really been kind of shunted to the side a little bit in this process?
I think it's mixed at the end of the day. I mean, I heard that there was a little bit of contraction in capital, maybe a year ago when some of the regional banks were going through, some of the event headlines there. But I think since then, most healthy private builders still have very good relationships with, local and regional banks to at least finance the home construction part of their business. And then, the land development side is where they typically need to bring in, other forms of capital.
Are we heading for the day then where the public builders just completely dominate the housing space and there's just not a whole lot of room left for private builders to operate?
Well, I mean, I think if you look at history, certainly in the course of my career, the public builders have taken, significant share, over time, but it's still only 50% of the marketplace. And I would
Yeah.
say there's lots of room for,
Okay.
really good operators, at the end of the day that, are really strong in their local markets, know their land positions, know their relationships with the subcontractor trade. So I don't think the private market is going away anytime soon. And there's also some really healthy, large, private builders that have elected to
Yeah.
stay private that aren't going to go anywhere. So, I think it's a trend. It's going to continue over the next several decades. But I don't think you're going to wake up one night and everybody's going to be consolidated at this
I'm
point in
glad to
time.
hear you say that, and I hope not, because I like all of my private builder clients. They're good people. Are there things then you kind of alluded to it just a second ago? What are those things that they really have to do? Do they have to just be careful about what markets they play in? Do they have to be super nimble? These privates, I mean, do they have to
Yeah.
kind of try to stay away from where the publics have a big kind of food court presence?
Well, I always like to describe home building as, it's basically picking up nickels in front of a steamroller. So you basically, just really need to mind your P's and Q's, which is, make sure you know where every dollar is being spent. I mean, the best builders are really, really cost conscious at the end of the day. So, really good at, negotiating with their subcontractor trades, with their suppliers, negotiating land deals, meeting schedules for getting homes complete. And I'd also say, I think one of the mistakes that some private builders have made in the past is they tend to hold on to homes too long. So, if a home's
Mm,
not selling, they think it's worth a certain value, they'll hold to it. Whereas I think most
yeah.
public builders, hey, it doesn't get better with age. We're going to take whatever lumps we need to today to, kind of move on. So, I think it's all of the above. But good
Yeah.
good operators are good operators.
You're right. I mean, it is. It's so much more difficult for that private builder to make that price cut or add that incentive than it is for the public because they're just not as pace oriented and they're going to lose money.
Right.
It's not volume for them. It really is. It's margin. Can that steamroller of a large public be a little slow though? Is there any downside to being too big? Do you see that happening?
Haven't seen that yet. No, I think when you look at the largest builders in the country, which are Lennar and D.R. Horton, every quarter they talk about the benefits of scale and how efficient their operations have become, and they're just really focused on delivering a high quality home at a very good price.
Yeah. Rich, are there any other kind of financing mechanisms on the horizon that might take root beyond land banking? Land banking got really big really fast. I know it's been around for a very long time, but it's become so important here recently. Do you see anything like what's the next land banking, I guess, or is there not anything like that near term?
Yeah, I think it's the future evolution of land banking that people are focused on at this point in time. And I'd say I'd refer to the recent Lennar announcement around they've discussed having a potential spinoff of a land company. So I think, there's a major move afoot among the public builders to improve their return on equity and return on invested capital. And to the extent that they can, reduce the denominator, a large part of which is land, by moving that off balance sheet with other partners, they're very focused on that. And, that is getting rewarded in the public markets. So I think, there's a lot of, recent announcements around, people working on this, and trying to come up with, different contraptions, or I shouldn't say, cut that out. I don't want to say contraptions, but working on, different, structures that will be able to move land off balance sheet and really create a very efficient home builder that has more of a just-in-time production mentality, and having access to land but having that off their books.
There's kind of a growing debate though about land banking. Are there reasons? Don't give away the store here, but are there reasons that some builders don't want to be involved in land banking?
Yeah. So I think the major reason that people cite as not doing land banking is one, the cost associated with it. So, it still has a fairly significant cost, well above what their borrowing costs are in most cases. So it is more expensive, but when you do the calculation around the cost of it, but reducing your denominator, it does improve your returns at the end of the day. So there's still some debate about whether I should incur that extra cost associated with land banking. I'd say, secondly, you need to have some infrastructure set up to be able to do this. You're negotiating deals with land bankers, and that's outside the normal kind of course operation. So if you haven't done it before, you really need to be able to set up some infrastructure to be able to do that.
Okay. If you're a builder out there who wants to take the "no, we don't like land banking" side in a debate, we've been thinking about having a show like that. So give me a buzz. Sorry. Looking for future guests. Let's end with this, Rich. Just big picture, how does mergers and acquisitions fit into this whole broad perspective of builder finance and home building finance?
Yeah, so I think it's an important tool in the toolkit for builders, at the end of the day. And I just go back through the, history of time. If you look at the largest builders today, some of which have the highest returns on invested capital, many of them got there through large scale M&A. So, whether it's Lennar having done Pacific Greystone, US Home, WCI, most recently Cal Atlantic, whether it be D.R. Horton in its original days, merging with Continental Homes, and then, embarking on a whole series of acquisitions over the years, whether it be Pulte buying Del Webb or Centex in its history. All of these were major deals. We can all look back historically and say, were they good deals at the time or not? But I think time has proven that, as they integrate those deals and scale, really shows its benefits, that, all of that M&A activity, has, inured to their benefits. So, I think it's an important tool in that whole, how do I improve my return on equity, my return on invested capital, and therefore improve my share price and my multiple. And, how you get from point A to point B is what I'm here for.
Yeah. Perfect. We appreciate that. By the way, that tells me that we are going to see at least a steady stream of M&As, if not more so. It's increasingly becoming necessary to, you have to be a bigger and bigger fish to swim in this sea.
Yep.
Okay. Rich, thank you so much for coming on. This has been very educational. I hope everyone enjoyed it as much as I did.
It's been my pleasure. Thank you very much, Dean.
Awesome. Thank you, everyone, for listening. This is Dean Worley for the New Home Insights podcast. Please check in again in a couple of weeks.